Hey, what's going on, guys? My name is Richard Moglen and welcome to another video. What I want to talk about today is a couple different psychological market indicators that I use along with analyzing, of course, the indexes and the price action of the leading stocks. But I always think it's a good idea to keep these in mind, especially given the current situation when we are in a correction, because a lot of these are very useful in perhaps confirming a market bottom after that follow through day. So today we'll talk about all these different ones in the market or the psychological market indicators tab on investors.com. And please keep in mind that I am part of the IBD influencer program, so this is a sponsored video. But first, we're going to take a look at the CBOE, market volatility of the S&P 500, or the VIX as it is referred to. And if you're not familiar with what this is, it basically is a measure of expected volatility based on the S&P 500 options prices. And looking at the graph here, you can see that recently we've really jumped up in this measure, and we're currently sitting at around 59 after being up near almost 80. And this is very high for the VIX, but it's not unheard of. And it's always a good idea to check out how this is doing, and how IBD uses this is it keeps track of the percent change above the 10-day moving average. So currently we are 22% above the 10-day moving average of the VIX, which is among that among the level that they look for to confirm a positive reversal in the market. So this doesn't work every time. This is once again a secondary indicator, but it's very interesting to look at and is always a good idea when checking up the health of the market. So looking at TradingView real quick, you can see historical values for this volatility index, which is also called the fear index, because it often rises during times of panic and fear with the stock market. So you can see in 2009, we got all the way up to about 97. And recently in January of 18, we got up to around 50. And right now we're still above that. And obviously it can stay up there for quite a while. These are weekly bars. You can see that in 2009, it stayed above, looks like 57 for quite a while. But once again, how IBD uses this is it looks for a rise of more than 20% above the 10-day moving average after that follow through day. And this can confirm a market bottom. So next market indicator that I want to cover is the Hilow Ratio. And essentially what this is a measure of new highs to new lows. And this is particularly important and useful during a sustained bull market. So during times like 2019, where you had a nice overall uptrend and then little dips along the way, this can be very useful in identifying when the market is ready to rebound from those small dips. So what you look for is the first up day after this indicator crosses below 0.5. And you can see that when the S&P 500 and the NASDAQ are below their 200-day moving average, this indicator is a lot less useful. And during those times, the initial trigger level drops from 0.5 to 0.1. So at this point, we're very low in this measure. And as I say, this isn't as useful during these times. The next indicator that I want to talk about is the margin debt contrarian sentiment indicator. And essentially what this measures is the amount of margin that investors are taking on. And this is particularly important during the late stages of a bull market. And if this contrarian indicator exceeds 55%, that means that investors are being way too optimistic and loading up on margin in order to buy stocks. And this means that when the stock market falls, they have to get rid of all that margin. And that means that the correction can really be significant. And as I said, the key level to watch is that 55%. And this contrarian sentiment indicator has successfully flagged 3 major market tops since the 1970s. However, you can see that down here, we haven't really approached that number in quite a while. And recently, even with the tops and the volatility and kind of sideways movement in 2015 and 2016, we haven't really seen that huge rush to get on margin. So I don't pay attention to this one particularly that much, but it is always something to look at, especially recently, right before the correction. You can see we weren't really anywhere near that overexuberance that we saw in 2007. So next up, we've got the put call ratio, which is one that I use every single weekend to check up on the market sentiment. And as the name suggests, the put call ratio is basically the ratio of the number of puts to the number of calls. And the key number to watch is a reading above 1.15, and this can confirm a positive reversal on the S&P 500 because people have become too bearish. So we are above that level currently, so this could mean that a fall through day could stick. However, as with the VIX, this put call ratio can stay above that key level for an extended period of time. So as with the other ones, this is a secondary indicator, and you should always look at the price action first to decide when to get in after a correction. And finally, the last psychological market indicator that I want to talk about is the bulls versus bears survey results. So what this is the results of a weekly survey of newsletter writers that is published by Investors Intelligence. And it basically measures the number of writers who are bullish and then bearish. And as with a lot of these, this actually works better calling bottoms than tops. And you can see that when the number of bears crosses above the number of bulls, that is very significant. And most recently that happened in 2018 when we had that 20% drop on the S&P and NASDAQ. And you can see that on this day, the number of bulls crossed above the number of bears. And that is when we had that successful fall through day and the reversal and back into all-time highs. So this is a very interesting one to watch, and I'll be watching closely to see if we can repeat this action here if we have another bad couple of days next week. And as I said, this could confirm the fall through day, but I'm always checking price action first. So that is pretty much all the psychological market indicators that I like to look at, and those are posted on Investors Business Daily if you go to the market trend and then click psychological market indicators. So thanks so much for watching. Please remember to leave a like down below. If you have any comments or questions, let me know down below in the comment section. But other than that, thanks so much for watching, and I'll see you guys in future videos.